Sam Laprade Show continues on City News.
101.1 FM and 1310 AM.
And we're back here on City News. I'm Sam Laprade. Thank you so much for spending time with us. I get to speak with Clinton Wilkins a number of times through the year because we always speak when the Bank of Canada shares a new interest rate or a new announcement. Clinton joins me now. Hi, Clinton.
Hi, Sam. How are you?
Good. Clinton Wilkins, Centum Home Lenders Limited. We know Tiff Macklin, the Bank of Canada, kept the key interest rate steady at 5% today. People breathing a little bit easier today, Clinton.
I think people are breathing easier, and I think they should breathe easy now, Sam. I really do believe that we are in a plateau situation. I was in Toronto just last week at Mortgage Professionals Canada, our annual conference, national conference, and we were there with mortgage professionals from across the country. And Benjamin Tall, the chief economist for CIBC, he said that we will likely start to see softening going in the middle of next year. So for anyone who's still sitting on the fence and not sure, really what is this future going to bring, if everything still continues to go as it's going right now, some softening is likely in our future, June, July next year.
Amazing. How are people feeling, Clinton? What are you hearing from your clients?
I think people are still very nervous, Sam. I can tell you that we see clients in all walks of life, but I'm seeing a lot of professionals right now. We're talking doctors and lawyers and accountants, and they're really waiting to the very last minute, especially with their mortgage renewals, with hoping that there's going to be, a magic bean or something. That, their lender maybe is going to give them a lower rate, or there's something better is going to become available in the marketplace. All the rates right now are high. So I think what people really need to do is what's going to be right for themselves. I've said before when we've chatted that shorter-term fixed rates have been the most popular. A 3-year fix, for example, has been one of our most popular products. But there's really been a shift, Sam, the last couple of weeks and in the last couple of months. More and more clients are choosing to take a variable rate again if they can qualify with the hypothesis that it is going to be cheaper over the next several years.
Okay. And you talked about the softening. When you speak about a softening, how drastic is that softening?
I think it's going to be a slow burn on the way down. I think it's always slower going down than it is going up.
So true.
The Bank of Canada is always going to be biased to a higher rate, and they're always going to be biased to causing a recession versus fueling the economy. So I think that's one thing that we need to remember. They are a biased institution, and they are always going to be more biased to a recession, and that's really what they're trying to do right now, and it's working. The interest rate increases that they've done over the last 18 months are putting the economy into a recession-type situation. And the real big challenge is, and I do think the Bank of Canada is short-sighted, the increases that they've done, they take 4, 6, 8, 12 months to really have the effect. So we're going to be feeling the effects of these increases for months into years down the road.
Oh, for sure. Because people think, okay, I can kind of make it work for 6 months. Maybe I'm pulling some savings. Maybe I'm, tapping into other sources of revenue. But at that point, they're like, I can only do this for so long. And then what's our family going to do?
Exactly. I think the dollars and cents that are in a family's pocket right now, Sam, are really stretched very thin. And it's not thin just due to these mortgage rates and the housing costs. The inflation's really being driven by, food costs and fuel costs. There's a lot of factors that are really impacting the day-to-day operation of a family's household.
And I always like to ask you about first-time home buyers. My heart just goes out to anyone trying to buy a home here for the very first time in this country. Give us a sense of what you're seeing, Clinton. Who are you meeting with?
And to be completely honest with you, a lot of people that are buying homes right now are first-time home buyers. I think they were really fatigued over the last 2 and 3 years because the competition was just so fierce.
Right.
And the people that are willing to get into the market now, Sam, are really prepared for the future. We're really, I think, getting in maybe at the height of the cost in terms of interest rates. And if they can qualify and get into the market now, and I think in many cases, there's not as much competition when they're buying homes. And we know in many markets from across the country, some of the home prices are less than they really have been the last couple of years. So I think the people that are really entering the market and transacting are the people that are just getting into this property ladder.
And Clinton, we've heard the notion that the best time to buy real estate was yesterday, but if it's not yesterday, then make it today. Is that still a notion?
I think it is, because the one thing that we need to remember is once the rates do start softening, there's going to be a lot of demand and a lot of pent-up demand coming back into the marketplace. Think about everyone who has not transacted the last 12 months. Canadians have an insatiable taste, I think, for credit, and they have an insatiable taste for buying and selling real estate. And some people were just sitting on the sidelines due to affordability. Maybe they couldn't qualify, or maybe they thought, you know what, the rates are high, I'm going to wait for the rates to come down. There's a balance between rates and purchase price. So is it better to buy a home at a slightly lower purchase price and a higher rate, or at a higher purchase price and a lower rate? The one thing I can tell you, rates change all the time. The challenge is if you buy a house at a certain purchase price, that purchase price is never going away. You own it.
Right. So that's a huge benefit, obviously.
I think it's a huge benefit, and I think the competition is a lot less. Mm-hmm. We always heard of these reports where homes had 20, 30 offers. Buyers were going in with no conditions. That's really shifted across the country. I think buyers and sellers are definitely becoming, more balanced in terms of the market. I think there's more negotiation, and the offers that we're seeing are definitely coming in with more conditions. So clients having financing conditions, inspections, and I think there's a lot more negotiation happening.
Okay. How many more times will we speak this year? It's just one more time in December, correct?
One more time. Okay. December 6th is the last announcement of the year. And why don't I fall on my, sword, and I'm going to predict right now that the Bank of Canada will do a hold on December 6th.
I hope so, Clinton. And it's, I just worry about so many of my friends. We speak about these things. We never talked about these things, by the way, before. Right?
It was taboo. It was taboo to talk about your finances.
It's so true. But a lot of people are like, oh, I'm renewing, or what did you get? Because they know that I just bought a house last year. And, all those conversations are happening. I really hope it holds steady. I know a number of people are really holding their breath for that. And, of course, the premiers are really getting into it. They're communicating with Tiff Macklin and really sharing what they're hearing from, people that are living in their provinces. So it's
exactly.
Yeah, it's become,
I 100% agree, Sam. And I think the one thing that Bank Canada isn't just impacting homeowners, it's impacting businesses and cost of credit. So it's really impacting everyone. And the one thing that's coming up is November is Financial Literacy Month. You're talking about your friends having conversations about their mortgage and about their finances. It's a great time to have those conversations. We're going into the holiday season. Let's focus in November as Financial Literacy Month and become more aware. And I think us having conversations like this, on the radio, hopefully it'll break down some barriers.
I'm hoping. Can I just ask you, we've got a couple of minutes. I really want to ask you this question because it can feel really daunting. When I bought my new home, I get an email from my mortgage broker, and there's this huge list of all the things I have to do. And it can feel so daunting on the other side of it, Clinton. How do you sort of help people through that process? They have to, provide, especially I'm self-employed and I'm a single mom. So I basically asked my mortgage broker if he needed a pint of blood as well. But
I hear that a lot.
Yeah. So the list can be daunting. Talk to us about it just being step by step, just one step at a time, right?
I think breaking it down is the best way to think about it, Sam. And I think if you're going to be buying a home or if you're going to be doing a transaction, start with a pre-approval. Get all your documents together. One of the big things, and you really hit on it, being self-employed is more challenging. But I think it's more exciting, too. More and more Canadians are becoming self-employed every day. So for traditional financing, when you're self-employed, we need a 2-year average of your income. And we need the proper tax returns and notice of assessment and a statement of account from CRA to confirm you don't owe any income tax. And I find the number one challenge people have, especially when they're transacting, is finding the documents.
Right.
Have all your documents in one place, save your documents, and know where to find them. I think that's a really good place to start. I think the other thing that was really important is know what's going on with your credit. Monitor your credit going into a big transaction. There's free apps you can download. There's Borrowwell and Credit Karma, and you can really know what's going on with your credit and have a good idea about what your situation is going into that transaction. And I think the third thing is really assets. Know how much you want to put down, know what your financial situation is going to be, and I think really work with that mortgage professional and figure out what your affordability is. Because there's two things. One is what you can be approved for, and two is what you can really afford on a day-to-day basis.
Yeah, really, really important. If you had a minute with Tiff Macklin, what would you say to him?
I would say that the Bank of Canada never gets it right, and I expect he will likely agree with me. He was one to say that the rates were going to be low for a really long time, and that was not the case. And the Bank of Canada is not really here to provide lower rates to Canadians and, spur the spending. They're really worried about more of that fiscal policy and controlling inflation. That's a really number one target, at least from my purview. Mm-hmm. And the only lever that the Bank of Canada has to deal with inflation is this key overnight rate. I think my feedback is we did a lot of increases very quickly, but we didn't wait to see what those impacts were going to be and really how long it takes from an increase to actually seeing the impacts of inflation.
Really interesting. Well, you just never know. Maybe Tiff Macklin from the Bank of Canada is listening right now to City News.
I would say he quite possibly could be in our nation's capital.
Exactly.
And, I think that a lot of people we're waiting for today, Sam, and I hope that people will breathe a little bit easier going into the rest of the year.
For sure. Good night's sleep tonight. Clinton, thank you for your time.
Thanks, Sam. Have a great day.
You too. Clinton Wilkins joining us from Centum Home Lenders Limited. We appreciate his time. When we come back, Jennifer Madigan, stay with us on City News.
Sam Laprade will be right back on City News.
101.1 FM and 1310 AM.